Warren Buffett once said that his favorite holding period is forever. Here are 10 high-quality stocks to buy and hold now in 2025. In this video, we're covering all of them from the biggest to the smallest. This saves the companies that have the most room to compound and be future multi-baggers until the end. Starting with number 10, Berkshire Hathaway. Berkshire's B shares are actually just off of their all-time high, and the company's just over a $1 trillion market cap. Its best-in-class assets and investment strategy will ensure continued future success. In addition to Buffett, 19 super investors own this stock. This is led by Guy Spear and the Bill and Melinda Gates Foundation, each of whom have 22.5% of their portfolios in the stock. Berkshire is the granddaddy of all compounders. Its future may likely not have as much room to run, though its returns are still likely to beat the market, at least according to Buffett's late-great partner Charlie Munger. A combined look at the company's numbers show that it's trading above its historical price to sales, although they still are priced below their Graham number. Typically, though, it's hard to look at this company on a combined basis because of the huge amount of ground that their companies cover. Still, their share buybacks can give us some indication of what Buffett's thinking. These all but stopped at the halfway point in 2024, signaling Buffett may not think this is a super attractive valuation. At stock number 9, we have LVMH, Moet Hennessy Louis Vuitton. This trades in the US under their ticker symbol LVMHF. LVMH is a $355 billion luxury goods giant. Right now, it trades in the middle of its 52-week range, closer to its low. The company is a global leader in luxury goods across multiple premium brands and products. Luxury has a timeless appeal that's going to ensure future consumer demand. Today, their ADR isn't owned by any super investors, and this was last in the portfolio of Thomas Russo in the middle of 2024. Today, the stock trades at more attractive valuations than in the recent past. They're trading above their projected free cash flows by quite a bit, yet they're still down from an earnings or a free cash flow-based DCF. The timeless nature of this business is part of why a GF value comes in at $950 per share. That's up 25% from today's prices. Stock number 8 is Stryker. The healthcare giant trades under the ticker symbol SYK, SIK. It's a $146 billion market cap that trades just $9 below its all-time high. Stryker is a major producer of medical equipment, implants, and hospital devices. An aging and increasingly wealthy population will ensure growing demand for medical devices for generations to come. Today, just 2 super investors own this stock, but it's a big position in Terry Smith's Fundsmith portfolio, making up 7.7% of his US holdings. And no surprise with its big market cap, this stock has been a long-term compounder, especially since the early 1980s. Today, however, Stryker's valuations look stretched. They're well above their median price to sales historically and way above their earnings or their projected cash flows. Their GF value signals the company may be slightly overvalued. Zoetis is another healthcare stock at stock number 7. It trades in the US under ticker symbol ZTS. It's a $75 billion market cap that's right in the middle of its 52-week high and low. Zoetis was spun off from Pfizer in the early 2010s. It's an animal health company specializing in veterinary care, medicines, and vaccines. Rising pet ownership and more ethical supply chains will drive continuous demand for animal healthcare. Zoetis is owned by 5 super investors. Their stock makes up roughly a 3 to 4% position in most, and Terry Smith also has a very small holding that he added to in the last quarter. The company's priced below their historical sales, yet they're way ahead of their projected cash flows or earnings. They're also coming in right at the top of an earnings-based DCF. Continued future growth is what's driving a $202 GF value. That's 18% higher than today's stock price. Old Dominion Freight Line is stock number 6. Trading in the US under ticker symbol ODFL, this is a $40 billion company. It's down 18% from its all-time high, yet because of a stock split, this is poorly reflected here. 4 super investors own Old Dominion Freight Line, making up just small percentages of their portfolio. This is also one of 10 stocks that Chris Mayer, author of 100 Baggers, has in his personal portfolio. Old Dominion is the leading US less-than-truckload or LTL freight transportation company. Its very efficient operations and dominance in logistics will remain crucial for supply chains into the future. It's hard to imagine that a trucking company has been one of the leading stocks since the turn of the 21st century, but that's the case with their stock being up more than 200 times since 2000 alone. That's on a lot of scale and operational efficiencies in their business, driven by a strong culture. Yet those positive attributes may be ahead of their valuations. The company's trading way above their historical sales, earnings, or cash flows. Still today, a GF value is right around their stock price, and it's been at this level for about the past 2 years. Now, as we break into the top 10, we get the first stock that's listed in Canada. This is Constellation Software, trading on the Toronto Stock Exchange under ticker symbol CSU. Constellation's a $64 billion vertical market software conglomerate. It acquires and manages specialized software companies for targeted industries that need their solutions for decades to come. They're run by their legendary founder and investor, Mark Leonard, and from 2006, they've been one of the top performing stocks in Canada. It's harder to see exactly which super investors own this stock, but in the US, 3 super investors own their ADR. This is led by the Sequoia Fund, who has 7.5% of their portfolio invested in Constellation. They're right at the top end of their valuations, however. They're trading well above their projected cash flows and out ahead of their median price to sales. The company makes a lot of acquisitions, but their size is going to make this harder into the future. Still today, though, they're priced at the top end of their DCF. The market's still pricing in a lot of growth for Constellation, and that's why a GF value comes in at $4,500 Canadian dollars per share. Next at number 4, we have Brown & Brown with the great ticker symbol BRO. This is a $30 billion insurance brokerage that trades just $8 below its 52-week high. They're a very disciplined and special insurance company that's up more than 10 times since the global financial crisis alone. Although there are multiple insurance companies on this list, it's a hard business, and Brown & Brown is priced well above their historical valuations. These numbers contribute to a GF value coming in at 20% below today's stock price. Only one super investor owns Brown & Brown, and that's a small percentage from First Eagle Investment Management. Yet Chris Mayer also has this stock in his personal 100 baggers portfolio. Stock number 3 is another insurance company. This is Markel Group, trading in the US under ticker symbol MKL. It's a $23 billion specialty insurance conglomerate trading at its 52-week high. Markel Group's in specialty insurance lines and models itself off of Berkshire Hathaway. They have their own private equity investments and a public stock portfolio led by their CEO, Tom Gaynor, a legendary investor in his own right. Markel is owned by 4 other super investors, and this is led by an 11% position from Josh Tarasoff. Markel's been a historical compounder, and yet while modeled on Berkshire, they've actually underperformed Berkshire over most of their history. Today, however, Markel is priced very attractively compared to where they've been at in the past. They're trading well below their historical sales, and they're even priced below their Graham number. That, however, isn't the best measure for insurance companies, so keep that in mind. Stock number 2 on our list is Watsco, trading under ticker symbol WSO. This is a $20 billion HVAC company trading $70 below its 52-week high. Wouldn't you know it, the only super investor in Watsco is Tom Gaynor from Markel Group. This is another long-term compounder, and changes in climate are only likely to boost demand for HVAC systems globally. A heaping dose of that future growth is priced in already, as Watsco is trading well above any of their numbers. Their fundamentals are hard to justify their current valuations. Their GF value is 40% below today's stock price, and that's been roughly flat for the last 2 years. Now it's time for the top buy and hold forever company on our list. Are you ready for it? This is, drumroll please, Games Workshop, trading in London under ticker symbol GAW. Games Workshop owns the super popular Warhammer series. Their ardent, loyal fanbase and niche market leadership in tabletop games, miniatures, and hobbyist products will ensure stability for a long time to come, granted their leadership does the right thing by their customers. Their stock has absolutely exploded in the last decade, and this dramatically outperforms the London market. One look at their numbers, and we can see that this company is a money-printing machine. Their returns on capital are to die for, and they generate a ton of growing cash flow each and every year. Today, Games Workshop trades above their historical sales, yet they're still below their DCFs on both a earnings and a free cash flow basis. Today, their GF value may look like they're slightly overvalued, but they're projected to keep growing into the future. Now let me know if you want to see a future in-depth video on any of these businesses. If you enjoyed the video and you want to support the channel for free, click the first link in the description. This will take you to Global Values affiliate Interactive Brokers.